It is a whopper. I've never seen this before, and I'd have to check the records, but it's up 100 basis points. That means the overnight interest rate by the Bank of Canada is up to 2.5%. That's beyond the 75 basis point that we were expecting, and a 75-point rise would be the highest going back to 1998.
Hello, everybody. It's Chris Dinnell here with Remax West Coast and the Dinnell Real Estate Group, and I've got Kelly Hudson, one of our favorite mortgage brokers here locally, especially here in Richmond. Kelly, how you doing this morning?
Doing well, but there's a lot of news in the news.
There is a lot of news. That's why we wanted to speak with you today, because a lot of us have woken up and they've seen this headline in the newspapers: Bank of Canada hikes key interest rate by full percentage point in surprise move. A lot of people, your phone must be ringing off the hook. I know we've already taken some calls already. What does that mean to our clients? What does that mean to your clients? So what does it mean, Kelly, and why is this happening?
Okay. So first of all, with interest rates, just in general, when COVID started in 2020 in March, the government lowered the interest rates to try and get people to continue spending money. So it worked really well, as you saw the housing boom during that time, because money was cheap. Now, what's happening currently, theoretically, when the Bank of Canada raises their rates, it only happens when the economy is doing well. But we've got a few extra pieces of the puzzle that are happening. So what we have is we've got uncertainty in the world. So we've got high inflation, we've got the war in the Ukraine, we've got supply chain issues, declining stock markets, lingering effect of COVID. And that has created a whole pile of uncertainty. And anytime there's uncertainty, typically there's changes in the market. Now, if you have a fixed rate mortgage, the Bank of Canada raising their rate means nothing to you. So let's just say that's half of the Canadians. If you have a variable rate mortgage, it's based on the Bank of Canada rate. And when the rate goes up, typically your mortgage payments go up to reflect that. So what happened during COVID is when COVID happened, the Bank of Canada rate was 1.75. And then almost overnight, they lowered it to 0.25. So typically the Bank of Canada rate goes up or down by 0.25. So it had gone up 3 times. So it went up in March, it went up in May, and it went up in June, or April and June. And what happened is it started at 0.25, then it went to 0.5, then it went to 1, and then it went to 1.5. So if you consider normal before COVID, where it was 1.75, there was still a little bit of reach. And prior to COVID, we didn't have any of these issues that I had mentioned. So what has happened is the Bank of Canada is trying to combat inflation by raising the interest rates. So it was at 1.5 and is now at 2.5. So what this means, the Bank of Canada sells money to their favorite clients, which tends to be the big banks. And then the big banks in turn sell it to people through mortgages or lines of credit or loans or whatever. So they use the Bank of Canada rate, and then on top of it, they put their profit. So anyone that has a variable rate mortgage, anyone that has a home equity line of credit, anything along those lines are going to be affected by this rate increase. A quick rule of thumb is for every 0.25 increase, your mortgage payments will go up $13 per 100,000. So if you have a $300,000 mortgage and it went up 0.25, then you would be paying an extra $39 a month. But this time it went up, the equivalent of 4 times.
$50 per 100,000.
$13 per 100,000.
Okay, 13
per 100,000, and then depending.
But that's on 25 points.
Yes.
But it's gone up a full point.
Yeah. So then you would
that's really $50 in, if you
156.
$156 every 100 grand.
Yeah. that
So
it's
if you have
gone
a
up.
$400,000 mortgage,
That's okay. So $13, you're correct. Sorry, I was using the total amount for 300,000, but you are correct. So if it goes 13 times 4, then you're looking at $52. It's gone
so
up.
$400,000 mortgage, that's an extra $200 a month payment just from one hike today.
Yeah.
So I'm sure the question that you're getting, is it time for people to lock in? Do they lock in those variable rates right now, Kelly?
Now, that's a good question. So not only have the Bank of Canada rates been going up, but on the fixed side, that's based on the Canadian bond market. Just to give you an equivalent, the Canadian bond market in last year was to buy a 5-year bond, which is where the 5-year fixed rates are based on, was 0.75. Mid-June, it was 3.52.
Wow.
Yeah, huge increase. Now, I just checked it this morning and it's 3.10, but that is still a huge increase. I mean, that's over 4 times where it was back in September, October of last year. So if you're trying to lock in your mortgage into a fixed rate, the fixed rates have gone up. So what's happening with the Canadian bond market is there's uncertainty in the stock market, and typically people will take their money out of the stock market if they're losing money and put it into something more established, which tends to be the bond market. The returns are much lower, but you're not going to lose money. And a lot of people are losing money on the stock market right now. So people who have a variable rate mortgage have the option of switching over to a fixed rate mortgage, but the rates on those are horrible as well.
Yeah.
So it's a real dilemma for people that are looking at mortgages or large loans right now because the interest rates are so high.
So the next question too is the people that have held rates right now, they're out there looking, maybe they have a 60, 90 day, maybe even 120 day hold on that rate. That rate is still held to the percent that they got qualified at. Is that correct until that expires?
Kind of. So what happens is if you have a variable rate mortgage, so the fixed, we know nothing's going to change. If you have a variable rate mortgage, the lender will offer you what they call prime, and then you could have a discount off of prime. What is going to remain constant is your discount, but if prime goes up, let's hypothetically say your discount is 1 percentage point, just to do easy math. If the rate today for prime is 4.7, yesterday it was 3.7, you still get the discount of 1 off of it, but the rate goes up. So you still end up paying more. So the discount remains the same. People that have got pre-qualifications, it's a little bit challenging because we also have what's called the stress test. So we have to pretend, from the government's point of view, they want to make sure you don't overextend yourself if interest rates going up, and that's happening. So if you could qualify, the current government stress test is 5.25, or whichever interest rate you get plus 2%. So if the interest rate just went from 3.7 to 4.7, I now have to qualify you at 6.7, which lowers your affordability. So yes, anyone with a variable interest rate out there or a fixed rate interest rate are going to be impacted with the stress test. Yeah. So typically we have to, if you're pretending you're paying a higher rate than you're getting, then from the government's point of view, you have less affordability. Your money doesn't go as far.
Now we've really seen the market slow down in the housing market over the last few months, and I'm predicting that this is only going to cause it to slow down more. If somebody wanted to reach out to you, Kelly, to get some more advice on what to do, how can they do that? I know we've spoken here a bit on what's happening right now, but I'm sure things are going to be changing as we go along, especially over the summer months here. So how can somebody reach out to you and get a hold of you if they want to chat about what's going on?
Best way is to give me a phone call or an email, and phone 604-312-5009. And the email's a little long. It's kelly@kellyhudsonmortgages.com. If you could drop it into the video, that would be great.
Perfect. Kelly, thank you so much. Rated #1 in Best of the City of Richmond just a few months ago. That's why you're the best. That's why we reach out to you. And if you're watching this and hey, you need some real estate advice, you're looking at, hey, maybe I need to sell my home or get into something a little quicker, reach out to us here at the Dinnell Real Estate Group, 604-961-5860, or you can also email us at info@dinnell.ca. Thanks again, Kelly, and thank everybody for watching. Hopefully the sky's not falling, and let's go out there and enjoy this sunny day. Thanks so much.